Back, we're a little soft going into the trading day today. So in other words, 3 hours away plus before we get going at the corner of Wall and Broad. We are still focused on earnings. We're still focused on the economy. And obviously, whatever's going abroad and the troubles with Turkey notwithstanding, it is all earnings. And about 8 out of 10 that have reported thus far, talking about companies, have easily beaten their earnings estimates, easily beaten their revenue estimates. And in fact, we're going at a clip that's about 25 to 26% better than last year at this time. Remember, even the most bullish assessments, I believe, going into this were that we would improve by about 19 or 20%. So doing a little bit better than that. Let's get the read from Jeff Saut. He is the Raymond James Chief Investment Strategist, very well-connected guy, joining me and my panelists here. Jeff, it is resilient, today's softness notwithstanding, that in the face of one hit after another. Keep grinding it out. What's going on?
There's a little negative energy coming in here at the beginning of the week, but I think the 2790, 2800 pull back to that, I think should be bought. I think it's a springboard.
On the S&P?
Yes.
Okay, good.
And I think we're going to trade out to new all-time highs for exactly what you said. I think you've got 20% plus earnings growth over the next 3 or 4 quarters.
All right, so just widen this out here with everybody. Is it your view that next Wednesday, when presumably we break the record for the longest running bull market, that it still has more room to grow?
I totally disagree with that. The people's lens is wrong.
I knew the producer's question was wrong. Immediately.
1949 to 1966 was a secular bull market. Were there pullbacks? The Jack Kennedy steel crisis in '62. Yeah, market got hit for 30%. Didn't stop the secular bull market. 82 to 2000 had the 87 crash. Didn't stop the secular bull market.
There's a difference between a bull market and a secular bull market, though. A 30% bump in the middle of it technically stops it.
Not from a historical standpoint.
Okay, so what you're saying here is even if we get a hit, even of that size, it would continue.
That's what I think. They tend to last 14 plus years. They tend to compound between 15 and 16%.
What do you think, Steve?
Well, I love this. Sounds like Bill Clinton defining a bull market. So a secular bull market, a raging bull market, a slow, fast bull market.
Theological bull market, right?
Yeah, but in terms of long-term trends, 49 to 66 was a real one. 66 to 82, really bad long-term bear market. So the point's a valid one. But the thing about this market today is if you could magically take away the overhang of possibility of a trade war, right now we have trade skirmishes. It's not a real trade war. If you could remove those clouds, I think you'd see the market go up another 10 or 15% easy with those
Goldman
earnings
said
coming
it would
in.
go up 11% if tariffs were on hold and if the Fed stopped raising interest rates after 2 or 3 more
By the way, one indicator of the strength of the dollar is not just other currencies. Look at the gold price, now below $1,200. Gold's going nowhere for 5 years. The dollar has been on a real long-term.
Do you look at all that stuff, the alternative stuff, and just say this is all the more reason why you like stocks?
Well, you've had about a 40% reduction in public companies. So if demand picks up,
fewer companies.
Yeah, I mean the Wilshire 5000 at its peak had 7,200 companies in it. It's now got 3,600. It should be called the Wilshire 3,600.
Is that right?
Well, that gets to a real point. Is one of the things that's hurt this economy long term. We're not creating new companies the way we have in the past. Kaufman Foundation's made this point. So the question is, are we going to get that long-term trend back again of creating new companies that are the biggies of tomorrow? One of the real strengths of this economy is every generation we create 50 to 75, unlike Europe or Asia, brand new big companies.
It's all tech, isn't it? They've taken 80% of the gains for the S&P this year. So it says to me that it's concentrated in just one sector.
Well, you have to think about the economic policies that distorted the markets in regards to chasing risk. And so a lot of companies didn't go public. They were private. They could stay private for longer. Think of, they're still out there right now. Uber, still a private company, right? So think about all these.
So you can still be creating a lot of companies that they opt not to go public. It's
because they don't need to.
But when
then they get an inspiration from Elon Musk, right? Go private.
Yeah, exactly.
But when there's no breadth in the market, there isn't sustainability in the gains. That's
his real name is Larry.
Who? Elon?
Elon Musk's real name is Larry from South Africa. Just a sidebar.
Yeah, no, it's kind of a pointless sidebar, but I do know. So when you see all this, and real quick, like the fewer companies and all that, I mean, how does that keep this going in this environment? How much longer do you see this whole thing going?
Well, Ron Barron, in a limo ride from the Battery back to the GM building, put his hand on my shoulder and said, there's not many of us left. And I went, excuse me? He said, there's not many of us left that have seen a secular bull market. And it's true. Oh. The majority of people that have come into this business think you buy stock, it goes up 50, 60, 70%, you sell it, look to buy another one. They don't understand buying Raymond James on the offering in 1983 and never selling it. And it's compounded money at better than 18% per year.
So for investors who might look at a false surprise or an event that they can't envision now, don't bail out.
I think we've got years left to go in this.
Wow. All right. So that's good for you, Susan. Not for me. It's a little late. All right. We'll see what happens. All right, Jeff. Always good seeing you, my friend.
Pleasure.
Thank you very, very much.